gold and silver are unavailable, markets will be closed. And if markets are closed, you're not going to be able to buy miners. You're not going to be able to buy anything. Banks will be closed, et cetera, et cetera. I would say that we are at the point now, and I warned people for many, many years. I always said, be careful what you wish for. You know, people are talking about $100, $200 silver, $5,000, $10,000 gold. And I always said, be careful what you wish for, because what kind of world are we going to live in under that scenario? Let me just say again, be careful what you wish for. You know, are you hoping for $200, $500 silver? Are you hoping for $10,000, $20,000, $50,000 gold? Be careful.
Silver goes from 70 to 200, and you don't want to buy it at 70, but you don't have any. You better, because if you don't have metal or real money, who knows how it's going to end. If it ends in the scenarios we've outlined, you're going to be very grateful you have some.
Extreme price targets in gold and silver are often discussed casually, but they usually emerge from periods of severe financial stress. Markets do not move to $200 silver or $10,000 gold in calm environments. Those levels tend to reflect breakdowns in liquidity, confidence, and access to traditional financial systems. When prices accelerate violently, availability matters more than price discovery. Bill Holter and David Morgan stress that scenarios involving $200 to $500 silver or $10,000 to $50,000 gold would likely coincide with bank closures, halted trading, and restricted access to miners and paper assets. A move from $70 to $200 silver would not be orderly. It would reflect systemic strain, potentially leading markets to close altogether. In those moments, physical metal serves as protection, not speculation, and those without prior exposure often find there is nothing left to buy. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The real shortage is in silver. I mean, gold is considered money. Silver is not primarily considered money. The demand for silver comes from so many different industries, and it is cash and carry. I mean, you can't put a paper contract into technology. You can't put a paper contract into a medicinal use. It has to be the real metal, and the problem is they can't print it. And that's where the severe shortage is showing right now, and that's where it's going to break, is in silver, not gold. Gold will follow. And if there was no such thing as silver, gold would ultimately break on its own, but silver is going to be the blasting cap.
Silver is the Achilles heel of the entire financial system. I did that video more than a decade ago explaining that silver is going to pull the trigger, not gold, and the reasons therein. So I'm on record at least a decade ago on silver's the key. As far as where we are, to repeat, you know, I talked about the run to gold before anyone talked about the run to gold. And I said, look, I know it's happening because the smart money is getting in a stealth manner, which was the banks. And they were buying gold at a rapid rate between 24 and 25. And then we started to take off. And I gave the analogy that it starts like a light, you know, a very light walk, then a brisk walk, then a light jog, full jog, a light run, a full run, and an all-out sprint. And that's a metaphor for how fast this market moves to the upside. And as I said before, I think we're in maybe the light run right now, and we're far from the all-out sprint. I don't know if we're far from it. I mean, maybe, you know, we go limit up 4 days in a row and the exchange is closed because, you know, there's chaos. People aren't getting delivery, as Bill indicated, and, you know, game over. I'm not predicting that. What I'm saying is we have a very volatile market. No one knows how much real demand can be filled by real metal. That's the key, as Bill has said. And so, yeah, I'm in total agreement. And I don't think we have a long ways to go. You know, there's my peer group, many are saying, oh, we got a 10-year bull market in silver from this point on. In theory, we do. But in reality, no, because the financial system needs to be, or the powers that be, powers shouldn't be, want this thing to continue in their paradigm, which means total control with a digital-based cashless society, and they want to move to that before these metals wreak havoc with their current financials.
There's no way to give a date. There's no way to time it. But just the action itself tells you something has definitely changed. There are no big smashes, buyers. What this is all about is and this is something my past partner Jim, who passed away two years ago, recently said, is that the end game would be a cash and carry market, and the paper game would evaporate. And that's the paper is not sought after. I mean, he talked about $50,000 bid on gold and no one selling, and $10 an ounce offered on the COMEX and nobody buying. Why would you buy a contract that can't deliver? And that's where we're headed, is toward a cash and carry market versus the futures markets that are fraudulent. They're going to be proven fraudulent. That's the bottom line. When they can't deliver, that proves they were a fraud.
Problem is, what happens if we go to a cash market? Meaning, if, pick a number, silver's at 200, how many people want to turn that silver into fiat? Some will, I would say, but probably not. So you're going to go to a market that's controlled primarily in a free manner between a bid ask, between someone that owns the physical and someone that wants to buy it for something else. Could be barters, like, look, give me this much silver and you can buy my used car lot. Who knows? But I don't see that happening could happen. I won't rule it out. I think, again, that powers that shouldn't be are going to do their best to blame it on the speculators, maybe remonetize gold. I'm not sure. Maybe put it in the new system. I agree with what Jim Sinclair said, if I got it right. Bill's right here. But, I think they're going to try their new system with a tie to zero, just their good word, and it'll fail, and they'll come back and have to tie the new system to gold. I think Jim's got it right, but I don't know. But he's a pretty clear thinker in my view. I followed Jim Sinclair since I was a kid. So anyway, that's how I see it.
Gold and silver are unavailable. Markets will be closed. And if markets are closed, you're not going to be able to buy miners. You're not going to be able to buy anything. Banks will be closed, et cetera, et cetera. I would say that we are at a point now, and I warned people for many, many years. I always said, be careful what you wish for. People are talking about $100, $200 silver, $5,000, $10,000 gold. And I always said, be careful what you wish for, because what kind of world are we going to live in under that scenario? The reason you be careful what you wish for is because, as I mentioned, everything is derivatized. You've got massive shorts that were put on for years and years and years to suppress the price. Now those shorts are being broken, and you're going to see dead bodies. And those dead bodies will spread because of counterparty. So again, let me just say again, be careful what you wish for. Are you hoping for $200, $500 silver? Are you hoping for $10,000, $20,000, $50,000 gold? Be careful.
So there's some stackers out there that say, okay, I don't know, I'm just going to ride this thing to the top or near the top. Then there's people that are catching on. Maybe they've watched Bill for 3 years but never took action, and now they are motivated. So in those cases, I'd say dollar cost average.
The powers that be are definitely losing control. If you look at a chart of gold, when did it start rising? It started rising the day after Biden administration sequestered the $300 billion of Russian treasuries.
Exactly.
That basically were stolen from them. And it became a bandwagon of nations joining the BRICS. And there's no question about it. Their countries are bailing out of treasuries, and they're using those funds to buy gold. And the reason they're doing that is they're looking at their balance sheet and they're saying, oh, well, we're 60, 70% in treasuries. What happens if the treasury market gets smoked? What happens if the U.S. Treasury doesn't like us and takes the treasuries? So what they're doing is they're putting something on their balance sheet that cannot bankrupt. It's the only Gold and silver are the only two monies on the planet that cannot default. So they're putting a default-free asset on their balance sheet that will be valued much, much, much higher in the event of a treasury default or more treasury confiscations, a break in confidence, whatever. But that's what they're doing, is they're putting gold on their balance sheets because they're going to need something to fill the black hole that treasuries will become.
The most acute shortage in precious metals is emerging in silver, not gold. Unlike gold, silver is consumed across technology, medicine, energy, and defense, and must be delivered physically to function. Paper contracts cannot replace real metal, and silver cannot be printed or digitally substituted. As inventories tighten, silver becomes the pressure point that exposes weaknesses in leveraged paper markets. Gold may follow later, but silver acts as the trigger because its supply is finite and its demand is non-negotiable. Market behavior has already shifted toward cash and carry dynamics, where delivery matters more than promises. Once confidence in paper settlement fades, futures markets lose relevance, and price discovery migrates to physical ownership. In that environment, availability outweighs quoted prices, and real metal commands the system's attention. Let's get back to the interview.
The problem is investors sensing monetization are just going to dump treasuries. I've talked about this several times before, that if you look at the last easing cycle, rates went higher, market rates went higher. And here we are again, they're starting to cut again. And where are rates? Rates are slightly higher than where they cut rates a couple weeks ago. So it's the Fed losing control of the yield curve, and that's a problem. That you have to understand that the reason gold and silver have been suppressed for all this time is because the U.S. Treasury had to be able to borrow basically unlimited amounts of money, and that's what this game is all about. There's mathematically they have to monetize, and mathematically it won't work. The money doesn't exist to pay the debt back and to pay the debt service. So what do they have to do? They've got to print more. And when they print more, that dilutes what's in existence. And they will dilute to oblivion.
They will print to keep the game going. And as far as like another Operation Twist, where they play with the long end and try to get interest rates to be quote unquote normal, yeah, that's a possibility. I've thought about that. They'll probably try it, but they're at the end of the rope, because no matter how much printing or buying they buy, basically the rest of the world is fed up with our dollar dominance, and that means the buyer of last resort is the Fed. So they are going to print until the market wakes up and says, wait a minute, this currency is worthless. Now, again, I want to be on record that I don't think it's going to absolute zero, but the perception that it's getting there quickly is already in play, and there'll be more and more momentum in that mean. And as that takes hold, you may see much further acceleration than we've already seen in these metals. I mean, for an example, if we doubled this year for round numbers in silver and platinum market, maybe they'll go up threefold next year. I'm not predicting that. I'm just trying to give you the idea of when we hit that manic phase. This will look like a light run. When it becomes an all-out sprint, you're really going to see fireworks. And I think we've probably got another year or so to maybe where the new system comes in, the digital euro, the Amero, who knows? I mean, I think I don't know the exact number. I think it's 190 countries in the world, like 163 are making digital currencies. What does that tell you? Well, the miners lag because it's the way the stock market works, and stocks are based on earnings. And these stocks are priced like gold's still worth 3,000 the ounce, not 4,400. And the silver stocks are priced as if silver's at 35, not 70. So there's a long ways for these mining stocks to go higher. And then, of course, again, in the manic mode, people that are late to the party will look for the cheapest gold and silver stocks they can find. And unfortunately, it's been my very seasoned experience being in this industry for so long that a lot of charlatans will come out with a lot of news pasture and a really great story and a great website and AI clone talking about the merits of this moose pasture, and they're going to discover more gold than what's in all of Australia, and people buy it because it's 12 cents, and just the buying pressure will take it to $1.20, and everyone will think they did a wonderful thing, except it was a big lie from the get-go. And I'm sorry to say that about our industry, but it does take place. We're not our industry. Let's just say it's grifters that take advantage of these things, and they do it in all sectors, not just the mining sector, although the mining sector seems to be one of the worst when things really get rolling.
What we're not talking about and what we should be talking about is credit. The entire world, the real economy and all financial markets run on credit. Credit is forthcoming as long as there's confidence. And if you have commodity markets that have broken and the contracts have failed and been proven fraudulent, what does that do to confidence? And what would that do to credit? Credit at some point in time is going to shut down. Credit will cease. And that's the end. My quote, when people ask me how much should I put into gold and silver, and now especially because of the laws being on the books for the great taking, my standard answer is whatever you don't want to lose. Now, add that on top of Richard Russell's famous quote of, in the end, the winner is going to be who lost the least. I would continue to definitely overweight silver just because the ratio, even at what is it now, 63, 64, down from 120. So from that 120, silver's already double the performance of gold. But I think you're going to see a silver to gold ratio probably 20, 25, maybe lower, who knows. But silver is undervalued to gold. It can't default, just like gold can't default. So I would pick the cheaper, on a relative basis, I would pick the cheaper of the two, and understand that, yes, it takes, for big money, you got to have an awful lot of storage space. But for the average person, if you want 100% silver, I don't have a problem with that, because you may end up using it to live on for, 2 weeks, maybe more than a couple months.
Rising precious metals prices are being driven less by speculation and more by a breakdown in confidence across credit markets. As rate cuts fail to push yields lower, it signals a loss of control over the yield curve. Governments are forced to monetize debt because the money to repay it does not exist, and continued printing only accelerates dilution. That shift explains why gold and silver are breaking free after decades of suppression tied to unlimited treasury borrowing. From a market perspective, silver remains structurally undervalued. Even after falling from a 120 ratio peak to the mid-60s, silver has already doubled gold's performance, yet mining equities are still priced as if silver were near $35 rather than $70. In panic phases, capital rushes toward tangible assets, while weaker projects and credit markets fracture under stress. When confidence fails, credit freezes, and real money becomes the priority. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.